Welcome to KNN. KNN is brought to you by Bob Knakal, Chairman of New York Investment Sales at JLL.
Hi, I'm Jon Hageman, Managing Director at JLL. Welcome to KNN. Today I'm here with Bob Knakal, Chairman of New York Investment Sales. And today we're going to talk about the third quarter investment sales market in New York City. So Bob, let's talk, before we get into the numbers, let's talk big picture. Where are we at in the cycle right now?
Hags, that's the question everybody asks us every day. Where are we in the cycle? A lot of folks believe we're late cycle again. We believe we're in a whole new cycle that started in October of 2015. We're sitting here today in November of 2019. So we are now 50 months into a correcting market in the New York City investment sales market. That is the longest correction that we've ever seen. We had a 47-month correction in the early 90s during the S&L crisis. So this is the longest. We're in uncharted territory now, as we say.
Bob, you mentioned that this is the longest correction. What are the factors that are driving that?
Well, Hags, I see kind of a parallel between the expansion that the economy has gone through since 2010. We've been on one of the longest expansions that we've had, but that expansion has been relatively mild. In the same way, this correction has been relatively mild as well. Yes, we've had a significant reduction in volume, but values haven't reduced all that much. They're down maybe about 10% on average. And of course, every product type has experienced different diminution in value in different locations. But if you look at past corrections we've had, I mentioned the S&L crisis during the early 90s. At that point in time, we had a 58% reduction in value on a price per square foot basis. The Great Recession from 2007 to 2010, it was a 38% reduction in value. So our reduction in value has been relatively mild compared with other corrections. And so I think maybe this is just taking a little bit longer to play out. There are a number of factors impacting things, not just the fundamentals within the market, but we've had policy that has impacted things and some other externalities that have exerted pressures on the marketplace. So it's not as bad as it has been, and maybe because it's been relatively mild, it's happening over a longer period of time.
So Bob, as a result, you think that we're just now in what's known as the new normal?
I'm not sure, Hags. I think if you look at the correction in the market, the swings in the economy are kind of like a rubber band. If you stretch it a lot, it should bounce back a lot. And maybe because the up has been just kind of mild, maybe it's gone down only in a mild way. But it is very, very clear that for the last 50 months, the market has been sluggish. Different metrics within the market have changed in different ways. But clearly, it's a challenge to get investment sales done today.
So Bob, let's get into the numbers now that the third quarter is behind us. Let's talk about total dollar volume.
Okay, we're going to look at the Manhattan market for investment sales over $10 million because that's the market that really drives everything. That's the market that will move first before it impacts the smaller property market or the outer boroughs. So if we look at the dollar volume within that sector, so far this year there's been $14 billion of investment sales activity in that sector through the first three quarters. If we annualize that, that's on pace for about $18.7 billion in value. Hags, that would be down 34% from the $28.4 billion we had last year and 67% below where we were at the peak of the market when the dollar volume of sales was $57.5 billion.
So that's dollar volume. What about number of properties sold?
Number of properties sold, we're seeing similar dynamics. Through the first three quarters of 2019, we've seen 116 sales in Manhattan over $10 million. That's on pace for 155, which would be down 36% from the 242 last year and down 69% from the 505 that occurred in 2015.
So Bob, that's the overall market. How have the different product types performed within those overall numbers?
Well, Hags, that's interesting. You would think that the multifamily sector would have the biggest drop in volume because of the new rent regulation reforms and the uncertainties surrounding that market. But so far this year, it's the land market that has seen the biggest reduction in volume. So actually, the volume within the land sector is down by more than it is in the multifamily sector. In terms of number of properties sold, over $10 million. Land is down by 86% below where we were at the peak of the market, while the multifamily sector is only down by 68%. But if you look at these very, very significant drops in the volume of sales, it's affecting every product type across the board.
So Bob, what happens the rest of this year, and what's your projection for 2020?
But we think that volume will be muted throughout the balance of this year. And for next year, I think we really need to wait to see how the fourth quarter plays out before we make our annual projections. The interesting thing is a number of clients have said that they've seen over the past 6 weeks or so a significant increase in the number of setups and offerings that they're getting. So there could be something brewing that might pick up volume. Again, you know, the market is always cyclical. We've had this long period of reduced volumes, and so something might happen that will pick it up, and certainly hoping that that's the case in 2020. But we'll be back towards the end of the year with projections for what we anticipate 2020 will be like.